Hi, my name is Danny Buxton. I'm the Director of 000 Property. I just want to welcome you to our Conversations with series. And today we're delighted to have Jenny Swain with us, with Paul Mergard as part of 000, and obviously our esteemed friend, Terry Ryder from hotspotting.com.au. So we just want you to sit back and enjoy our conversation today with Terry.
Well, good morning, Terry. Good morning, Paul. You can't pick up a paper at the moment without seeing doom and gloom and it's all bad news in the property market. Is that actually the case? Should we all be concerned at the moment about falling property prices and where this is all headed in Australia?
It's not the case at all. In fact, there's no statistical evidence out there supporting most of the headlines. And the headlines are the problem. Quite often you read the headline and then you read the article underneath the headline, and the content of the article actually doesn't support the headline. So we're getting a lot of negativity, and a lot of it's coming from the headlines, sometimes the articles themselves. Too much generalisation, where we have a situation where the capital city average for prices is a negative figure dragged down by the Sydney situation, but 5 of the 8 capital cities actually have rising prices. But media is interpreting that in their headlines as prices falling across Australia, and it simply isn't the case. We've got many really strong rising markets in Australia right now. They're smaller capital cities and a lot of the regional areas.
So speaking of the Sunshine Coast, we've got major infrastructural projects happening right as we speak. We've got the subsea cable, which will only be the second one in Australia to land on the eastern seaboard. We've got the new runway at the airport under construction. We've got the new CBD happening. We've also still got the ripple effects that are happening from the hospital that was completed only a couple of years ago. What is the future for the Sunshine Coast?
I think it's a tremendously strong future. It's much stronger than I would have said, say, 5 years ago. The Sunshine Coast used to suffer because it's basically a tourism economy, and tourism economies are a little bit sort of fragile and fickle. But now it's got these extra layers, these new industries like the medical precinct, like the emerging new CBD, like the big infrastructure spend, $1 billion on the motorway, $500 million on the airport. It's about $25 billion in total. And that's just revolutionising the Sunshine Coast economy, making it much stronger. And new people are coming in because of the jobs that are being created. Some of them very well paid people, like working in the medical precinct, and they're all looking for real estate, either to rent or to buy. And that's pushing up prices on the Sunshine Coast. And I think that's going to be an ongoing thing.
Have you seen that, Danny?
Yeah, certainly. I agree with Terry. I think we're also seeing a fairly big change in the demographics of people that are moving here. Sunshine Coast traditionally, as Terry said, tourism and construction. People coming here to retire, to maybe self-employed businesses, a lot of SMEs, but we're now seeing a big change with professional services and jobs. Certainly the hospital was a big game changer, and as you discussed, that rippling effect, and we're certainly seeing that continue to happen with what's happening with the undersea submarine cable.
I think the other thing, even on the hospital, like the hospital's not even fully open yet, so that precinct is still not finished, and the hospital's still a couple of years away from being complete. So we're still to see the impact of some of the hospital growth, I think, and certainly people working in that area. That's still to come in the years to come.
And Paul, the demand of, I guess we're seeing a lot of the big shift in the population. I mean, you've got to look at the past, you've got to look at currently, but you also got to look at the future and what's happening in the future and what's expected. And when you look at what the statistics tell us, what the numbers are telling us with the growth, you are seeing people, an hour from the city, an hour from Brisbane. So it's become a real satellite city of Brisbane in many ways.
People talk about game changers. The Sunshine Coast has got 5 or 6 game changers, all happening pretty much at once. I mean, the medical precinct is one. The undersea cable is going to be another coming in.
Terry, tell us about that. What do you think will happen with that undersea cable?
I honestly don't know. I just know that it's an exciting and almost unique event. I think you mentioned it's only the second.
It's the second cable into the eastern seaboard. There's one at Perth, and in Sydney it branches off to a couple of ports, and we've got capacity to do that here as well with the subsea cable. But we're going to have the fastest cable to Asia and the second fastest to America. And I understand that already our economic development team are taking inquiries now from people overseas looking to base themselves here because of that.
Decent-sized corporations.
And it's really exciting that the Sunshine Coast has snared that. And I think it's a symptom of one of the reasons why the Sunshine Coast is rising, I think it's an underrated factor that what your local council does or doesn't do is really significant. When you've got an ambitious council that says, right, we want this city to grow and to become more significant in the overall scheme of things, it has a big impact, and that's happened on the Sunshine Coast.
What are those areas that you look for from a hotspotting perspective? Is it just the infrastructure, or is it the demographics as well? What are those things that you look for that go, you know what, that's a spot that I want to be in?
So all of the above and more. I mean, the Sunshine Coast is actually a great case study of what we look for. We're actually seeing similar things emerging in, say, Townsville. Similar infrastructure spend, slightly smaller city, lots of potential for growth there. But we certainly do look for the infrastructure spend. It's probably the single biggest factor. I think it's the single biggest thing that drove the Sydney boom. The infrastructure spend there has been colossal, and it's created all this economic activity and jobs, and it's out of jobs that comes the demand for real estate. But we also look at other things happening in the underlying economy. Is it growing? Has it got diversity? Is the population growing? What's happening in the dynamics of the local property market as a result of all of that? But in particular, what's coming up for the future, the most important part of our reports is the one we call the future prospects, and that's where we look at, we're more interested in the future than the present or the past. In some locations, the recent past has been a bit ugly, but we're more interested in the future. And if there's a big spend coming up on infrastructure and on other types of development, if there's things developing in the economy, they're going to be building a new hospital, the local university is expanding, that kind of thing. That's really significant, we think. Speaking of regional Australia generally, it's very much underrated by investors, by media, but many of our regional centres, and the Sunshine Coast is a great example, have much greater significance than people think. Some very, very big companies choose to base themselves in regional centres like, say, Ballarat, like Newcastle. Sunshine Coast is an emerging example for all sorts of reasons, and affordability might be one of them. The existence of a major airport is usually a helpful factor. A strategic location like Albury-Wodonga, for example, at the border of New South Wales and Victoria, is very strategically located. Lots of big companies have a massive presence there for warehousing and distribution reasons, because they can get quite easily to Canberra, to Sydney, to Melbourne from that one location. So we have all these underrated places around Australia that have got very strong, diverse economies, doing really well for their property markets, but not getting any national attention. And that's one of the problems. There's this obsession with what's happening in Sydney. It's being extrapolated to the whole country, when in actual fact we've got all these different things happening, and many of them are really super positive, but we're not hearing about them.
Terry, you talk about data and obviously looking at data. Sometimes I find when we're researching areas that data can vary from one researcher to another, and there's quite significant shifts in data. How do you know when you're researching or you're looking for information, how do you know how accurate that information is, and how do you double check that? Because that's obviously, for us, we're very big on building your team, finding the people to guide you and help you in that process. But if someone's out there doing it alone, how do they know whether that data that they're reading from CoreLogic, wherever it may be, is accurate?
Well, they don't, and I think the safest assumption everyone should make is that it's all dodgy data. It's all rubbery figures to a certain extent.
So lies are more statistics, lies are more statistics.
Exactly. Look, when you just consider what they're trying to do, take Sydney for example, it's a city of more than 700 suburbs, and what these research firms are trying to do is distill all the tens of thousands of transactions in these diverse markets, like you've got Manly versus Campbelltown or Bondi versus Penrith. How do you compare those markets? But they try to distill it all down to a single figure, saying Sydney prices are doing X, and it's ridiculous. So they all have their own methodologies. They're all flawed to a certain degree, and they're all coming up with different figures. So CoreLogic says Sydney is down 8%, but the ABS says it's only 4%, and SQM Research says it's 3%, and Domain says it's about 5%. Who's right? The Hobart apartment market, one source says it's down 1%, another source says it's up 15%, and another source says it's up more than 20%.
A big variance there.
Massive. One source says the market's falling, and the other one says it's going gangbusters. So who do you believe? And the reality is, well, there's no way of knowing who's right and who's wrong. As I say, it's all rubbery figures to a certain degree.
Because property is a long-term thing. When you invest in property, it's not a get-rich-quick scheme. And obviously, there are ways where we can accelerate that growth through development, and something that we help some of our clients do, whether it be with townhouses or splitter blocks or different things like that. But also, when you're designing a home, I guess understand the demographics of that area is very important too, which can add to, I guess, increased value, and you create that market within the markets. And also understanding there are different markets happening in different areas within a small pocket. How do you dig down deep though? How does that punter out there know? Because you don't want them to be a punter, do you? They don't want to just be an investor. You're an investor, not a punter. How do you extrapolate that data?
Well, all the information anyone could ever need to be informed is out there. You just got to put in the time to bring it all together and look at it and make sense of it. But it does take a lot of time, which is a bit daunting for the average punter, or you can employ somebody to do it for you. And that's what we try to do at Hotspotting is
Hotspotting.com.au?
That's the one, yeah.
Fantastic.
Thank you for that. We try to make it easy for people, bringing it all together and trying to make sense of it. So we don't, like some research companies just spit out a report out of the computer with graphs and charts and figures, but it doesn't explain it to people, whereas we actually write coherent reports, so this is what it all means. And having done that step, then people need to actually talk to people in the local industry. It's really useful to visit a place and just wander around and talk to valuers and buyers agents and selling agents and local storekeepers, anyone you can. I encourage our mentoring clients to do that, and some of them actually do it. They might spend several days and just go around and talk to people, and they start to get a real impression of what's going on, because the median price data is rubbish. It tells you what's happened in the recent past anyway, which isn't that useful. So it's really getting a feel for the dynamic of a place. And what we do that's different from what other people do is we look at sales volumes. I think it's way more important, because these are matters of fact, whereas median price data is dodgy data. They all come up with different figures, whereas the number of sales is something that we can place.
And you certainly need volume in that to be able to give you accurate information.
Yeah.
And speaking of being spooked by things, we've had the Banking Royal Commission at the moment and changes to lending out of your super fund and those sorts of things. Do you think that's impacted the market? Obviously it's impacted the market, but what's the long-term effects of this, or do we not know? Are we just having a stab in the dark, or are we perhaps, let's explore that for a moment?
Yeah, well, it's having an impact, although, again, it's not as big an impact as being stated in media. Media would have us believe no one can get a loan anymore. Most people are actually getting the loans that they're applying for. It's just taking longer because the banks are making them jump through greater hoops. So everything's taking twice as long as it used to take, but which kind of affects settlements, I think. Perhaps extensions have to be applied for. The banks have overreacted, I think, to the Banking Royal Commission and to the dictates of APRA.
And will we see a correction of that, do you think?
There has to be a correction, because the banks have to write their multi-billion-dollar profits, otherwise their shareholders are going to get very edgy, and they can't do that unless they lend money to people to buy houses. So they've gone too far. The Reserve Bank is telling them that right now, in fact, that you've gone too far and you've got to adjust back a little bit.
Yeah, can you talk about that? Because I know the Reserve Bank made some noise about that just recently.
Well, the Reserve Bank is aware that there can be an impact. There might be an impact on property market and the economy if the current situation continues. We've seen it before, though. With, APRA has brought down restrictions of various sorts over the last 2 to 3 years. There's been a period of adjustment where the banks have gone okay, and they've adjusted back, but quite quickly they've got back to normal.
But they've got to lend money because they've got to keep their shareholders happy.
And it's actually a very competitive environment. They're not just competing with each other, the major banks, they're competing with the second and third tier lenders, and more borrowers are realising that we can get a better and faster deal if we go to some of the second tier lenders. And so the banks are actually going to lose market share increasingly to the smaller lenders if they don't see some sense.
Terry, there's also a lot of media hype at the moment about interest rates going up. What are your thoughts on what's going to happen in that kind of space with interest rates over the next little bit?
Well, in terms of the official cash rate, it's not going anywhere anytime soon. The Reserve Bank's made that really clear. Most of the forecasters say it's not going to change next year, maybe the year after. Of course, it's become a little bit irrelevant because the lenders are running their own race. They're not just reacting to the Reserve Bank's official rate anymore. And we've seen one very, very small increase from the major banks recently, and that was overhyped by media. It was very, very small and very minor. I don't think we're going to see any major changes there. Whatever changes, we'd have to see like 4 or 5 interest rate rises before it started to have a negative impact. I think it's overrated. If you look at the times in recent history where Australia's had a genuine national property boom, which is actually very rare in this country. We have all these different markets doing their own things, like we do right now. But when we've had true national property booms, they've all happened in times of high interest rates and rising interest rates. Like the late 80s and the early part of this century, interest rates were much higher than they were now, and they were rising, but the rises didn't quell the boom.
Those rises were trying to probably slow the economy down because
that's right. Well, interest rates were rising for a reason, and the reason was that the economy was strong, people were well employed, secure on their jobs, and they were confident. So rising interest rates is actually quite a positive thing for property markets, I think.
I actually agree with you. I was just interested too, though, with occasionally at 000 Property, when we're sitting down and we're talking with a client, and occasionally a question comes up, what about the rest of the world? I read that Australia's the most expensive place in the world to live in. I mean, what are your thoughts? Can you comment on that?
Oh, another piece of media hype. We could spend the next several hours talking about it, couldn't we? There are some reports that come out, like there's one called Demographia. It comes out once a year, and it says Australia's the most unaffordable property in the world, but it only compares Australia with 6 other nations. There's over 200 nations out there that don't make their report, including there's nowhere in Europe in the report, for example. I don't know if anyone's been to Paris recently, but real estate's pretty more expensive there than Sydney, believe me. Lots of places as expensive or more so than our most expensive markets.
And our market is so different from the US too, because we're predominantly, most people live in major capital cities or within a certain time frame, whereas the US market is very much a regional market as well, with lots of regional cities, and obviously their lending environment's very different.
Yeah, we are a very, very different country. But if you leave Sydney out of the argument for a while, Australia is not a particularly unaffordable market. There's lots of affordable places in most of our capital cities, but particularly in regional areas within striking distance of our major cities. That's one of the things driving regional Victoria's markets at the moment, that you can buy at a fraction of the price in a hill change town just outside Melbourne and still have a job in Melbourne, because the connections are so strong.
There's a really interesting article in a Sydney paper that said, I can't believe how expensive land prices are now. It's so unaffordable. I can never see how my kids could ever buy a block of land. That was written in 1972. It's pretty much the same. Yeah. We hear the same thing over and over again.
We do. And I saw an article from one of the Sydney papers saying the same thing. Our kids have been priced out of the market. They're doomed to a lifetime of renting, and that was in the 1980s, that article. So we're still having the same conversation. The situation doesn't change, and the reason is because the debate is so poor. The debate in media keeps focusing on furphies like negative gearing instead of zeroing in on the real issues, which is really, I think, the high cost of building new dwellings in this country. And that's high because all 3 levels of government treat the housing industry as a cash cow, and they all milk it for revenue. And when they do that, the price of producing the product goes up. Absolutely. And there's research out there that shows that about 40% of the cost of new house and land package on average in Australia is government taxes, fees and charges. And if you eliminated that, we'd have very affordable new dwellings, but they're not going to do that.
That's never going to
happen. No, they'd much rather...
It's like getting rid of stamp duty, isn't it?
It's like an episode of Yes Minister, I'm sure you've all seen it, but there was an episode where Sir Humphrey Appleby demonstrated how you gave the impression as politicians of doing something meaningful while changing nothing, and that is you hold an inquiry, and at the end of the inquiry you recommend a Royal Commission. At the end of that you find an unpopular minority to scapegoat for the problem. Now Australia at the federal level has done that on the issue of housing affordability. They had an inquiry, then they had another inquiry, and at the end of it they decided to scapegoat foreign investors. And so they had a big clampdown on foreign investors. But the median price for a house in Sydney is still above $1 million, and it's still $800,000 in Melbourne. Nothing's changed because that wasn't the problem. Foreign investors weren't the problem. The problem is the politicians themselves who are trying to point the finger of blame everywhere else.
So spots too that we could identify at the moment that you're all looking at that are hot spots, if you like, what would be your picks?
For us, we love at 000 Property at the moment, we love the Sunshine Coast, but trying to find the right spot on the Sunshine Coast, I think you have to be very careful with where you go.
There are parts of the coast that I'm not a big fan of, where I think you've got jobs moving out of a particular area because of people relocating within the Sunshine Coast. But there's certainly the right spots on the Sunshine Coast.
And the type of property you're looking for as well on the coast too. So traditionally we used to do a lot of house and land sort of stuff in your properties, but then also looking at the townhouse opportunities, particularly in and around that Maroochydore area. We're not big fans of units at the moment for us because of the cost of, from an investment perspective, when you add in your body corporate fees and your other charges, has a fairly big impact on your yields, and predominantly the people who are buying that, you tend to be competing against a lot of other people who are renting, if you're in a big apartment block, renting those properties as well. We like some areas in Brisbane, some of the northern suburbs around that Redcliffe area. Newport is something we've spoken about. Terry, which we just love, where with the railway line coming in there has made it's a bit of a game. Again, you look for those little game changes. So nice infill development there where we see opportunity. We're seeing clients over time. We see them making good money and getting good rental returns. We mentioned Ballarat. Something is for us. We see there's a good window of opportunity in Ballarat. Again, I say window because we also want to look at the yields, and I think the rents, as we're getting the growth, we don't see the rents particularly going to be growing as significantly as what land values and property prices are going to be growing. So to get that balance for yield and growth is very important for our clients because cash is very important, cash flow. Been looking very carefully at Adelaide, and that's something that we're exploring for our clients. We think there's some really good opportunity there. But look, again, it comes down to the individual client. Everybody's different, and for each and every one of us here, where we're going to invest will be different based on our current financial situation, our age, and what we're wanting to achieve. And so I guess the key is to sit down and identify what is it that we're wanting to do, what is our goal, and then understanding where we sit today and what our financial situation is, and then being able to map out a bit of a plan and a strategy in being able to achieve that, using the research, tapping into the experts in the area, because we just do one part, but then talking to your financier and getting the right advice with your financial goals and what you can afford to do, and then that determines where we're going to go. And it's not just about now, it's about the next 5, 10, 15 years.
I think it's always important too, when I'm sitting down with a client, I kind of want to know, well, where are we starting from? Like, let's forget about location, or at least from a starting point, what budget are we working for? What's your comfort level as well? And then when I know that you've got X amount of dollars to spend, I'm kind of looking across the country then at locations, and certainly using some of Terry's reports to go, well, if I'm going to spend that much money, what can I buy with that budget that you've got in mind of what someone's able to spend and someone's willing to spend? Where is the best location in Australia to be spending that money? And again, it's also not just looking then at location, and then it's looking at what type of property. So are we talking about, because again, I think you look at the median numbers, well, it's like, well, is the median reflective of a 1-bedroom unit, or is it reflective of a 5-bedroom house on acreage? Like, what are we talking about even in that? And I think even when you're looking at the type of property you're going to invest in, location's incredibly important, but coupled with that is the style of property and what's the demographic that you're aiming at. Are you aiming it at a student accommodation around a university, or are you aiming it at a blended family? Maybe you've got 2 families coming together with 4 or 5 kids, because you've got 4 or 5 kids from a couple of 2 marriages maybe coming together as well. So it's all that kind of stuff that also goes into what sort of property and what someone's budget is. I think most people would probably end up, if they're looking to do it by themselves, they're looking at a 5 or 10 kilometre radius from where they currently live.
We call them accidental investors. We see a lot of people.
That's safe though, isn't it? Because it's what you know, I guess.
Yeah, I know what's a couple of streets over, so that's what I know. But
sometimes the worst property investing is one just around the corner, because you drive past it every second day, and then you end up having a coronary because you're stressing about what's going on. And in the day, it's all about the numbers. And this is something that I love about Terry is it's all about the numbers, and the numbers don't lie. And if you look at those numbers and you understand those numbers, and you treat it as a business. Yes, we often say to our clients, look, you buy with your head, not your heart. Unfortunately, with property, most people buy with their heart because it's tangible, it's there, and we see it, and we fall in love. Or we see a lot of accidental investors where they love their own home, So they found another one, but they don't want to sell their home, so they turn that into investment property. And so getting the right advice from the right people, and we've talked about team a lot, independence is really important. Terry's independent from us, and so we can go to Terry and we can say, what do you think? What are your thoughts? And we can discuss things, and we can then come up with an opinion that's right for our clients. But having an independent accountant, having an independent financier, not something that everything's all in-house. We find when everything's all in-house, there can be some blurred lines there. And when people invest in property, it's a lot of money. So you need to make sure you've got the right people around you working with you. And certainly those who don't have that, between all of us here, we can then point them in the right direction and introduce them to the right people to build their team so they can make wise, smart decisions. But not everyone should invest in property either, though, because for some people, if you can't sleep at night with some level of debt, then maybe property isn't the right thing for you. It is an asset class. It's an asset class that we love and we're very passionate about, and we've all personally done very well out of. But it's also got to be right for that person as well. Terry, one of the, I think, topics that's going to become a bit of a hot topic in the next few months is negative gearing. Obviously, people don't understand negative gearing properly, I don't think, and it's a term that's thrown around. Obviously, what are your thoughts with potential changes to government policy if we have a change of government? Is that going to have an impact on the housing market to some extent?
It will have an impact. It will change. It doesn't have to be a super negative one, no pun intended, but it will have an impact. It will change where people buy. I mean, if you're buying in Ballarat at the moment, we're talking quite a lot about Ballarat, negative gearing becomes almost irrelevant because the rental yields are pretty strong there, and you can buy there at a relatively low price and get a pretty good rental. So you're not actually losing money on that investment, so you're not necessarily looking for negative gearing benefits.
We use negative gearing a lot for our clients to give positive cash flow. So it enables them with the cash flow. With certainly the benefits of building new, we get to design the house. That's using your research and talking with you to get the right, I guess, for the demographic of that area, and I guess what the needs are for that area and the affordability of that area. And then with the depreciation on that house that you get when you do your tax, then obviously it kicks in and gives you that positive cash flow in holding that property. And for some, we're seeing actually a fairly significant positive cash flow in that process.
So it's going to just mean an adjustment in terms of where people buy and what people buy, because what we're being told constantly by the potential future Labor government is that it's only going to, the banning of negative gearing is only going to apply to existing properties. New properties will still attract negative gearing benefits. So it's going to perhaps be an encouragement to people to buy or build new.
Well, we've already seen that a little bit with the changes already with the current government, where they've removed depreciation on your plant and your fixtures and fittings on a property that's already been owned by somebody. So if you're buying a property already owned by somebody else, you don't get to claim that, even if there is life left in the depreciation on that. But which does have a little bit of an impact. But certainly, we don't think it's going to have a massive impact. Although I think, again, the media likes to say one thing and obviously promote doom and gloom. But it will have, as you said, some sort of impact.
There are lots of different views being expressed because we, in our research effort every day, we're collecting everything we find from all sorts of different sources, and there's lots of different views being expressed on whether it should happen or whether it shouldn't, and if it does happen, what the impacts will be. But I think Bill Shorten himself says it's not going to force down the price of houses, sorry. Which begs the question, well, why are you doing it then? Because you're dressing it up as an improvement of affordability, helping first home buyers, but to do that you've got to push down the price of houses. It's not going to have the desired impact that they're talking about.
Do you think it'll have an impact of increasing rents with people losing the tax?
It will in the biggest cities. We saw that last time. I mean, it's interesting, and then in this debate, no one's referring to the precedent. The precedent. We already have a precedent.
Yeah.
He scrapped it and then brought it back with rude haste.
9 months later or something,
yeah, within a year he'd brought it back in because it had unforeseen consequences, particularly with forcing up rentals to the point that his own constituents were adversely impacted. And that will happen in Sydney and Melbourne because it's difficult to see how the numbers stack up in cities where, rental yields are below 3% if you don't have negative gearing benefits to compensate. So, yeah, we're going to see rentals rising.
People have to rent. People have to live somewhere, and if so in the day it's just going to create that challenge.
Yeah. So rents will rise, and they'll rise to the point where property investment becomes attractive again. That actually happened before the recent Sydney boom. What happened before prices started to rise is that rentals had risen for a couple of years, and rents were really strong. And then people started to buy, and so prices started to follow. So the relativity got a little bit out of whack. So there will be impacts, but they're not all necessarily negative ones. The markets will adapt, but who knows what will happen. The need for the scrapping of negative gearing, it was originally to take the sting out of those big city markets that were very expensive, but they've stopped booming, so why do we need it?
Well, thanks, Terry, for coming along. I guess, is there any, obviously we're just finishing on a bit of a negative, so what's a positive that we can finish on with the market? You're obviously fairly bullish of where, obviously there are markets within markets, and it's been able to identify those markets, but there's certainly, the doom and gloom that we're seeing in the media is certainly not as prevalent. Any parting words you'd like to leave with our listeners?
There are lots of growth markets in Australia, really strong ones. It's just that they're not in the two biggest cities anymore. They're in the smaller capital cities. They're in some really strong regional centres. Markets within markets you mentioned. It's significant, I think, that in Canberra, Adelaide and Perth, the top end has moved really strongly. That's often the first thing that moves when a market's in an upcycle. We haven't seen it across the board in those places to the same degree or as yet, but the $1 million suburbs have all shown strong growth in Perth, Adelaide and Canberra in the last 12 months, which I think is one of many signals of the beginning of something in those locations. So there's plenty of positive stuff out there. Vacancy rates is another very positive thing for people considering property investments. In most of our cities, they're very, very low and trending downwards, and even more so in regional Australia, which means that the rental markets and the rental yields are coming stronger.
So anyone still considering whether it's time to invest in property, they shouldn't be concerned about the doom and gloom they're hearing. They should get good advice from good people, do their research, know their facts, and then make a decision based on that, because it's still a good time.
The best advice we can give to people, if they want to be successful in property investment, rule one, stop reading newspapers. You're just going to fill your heads with negativity and misinformation. Go to trusted advisors to get good information and good advice on how to proceed.
Great. Thank you, Terry, Danny and Paul.
So thanks again for listening to our series today, and a big thanks to Terry for coming along and imparting your wisdom to us, for Paul and for Jenny as well, and we look forward to hearing from you guys. Feel free to jump on our website 000property.com.au or Facebook and like us, and we look forward to having the conversation with you. Thanks everyone.
At 000 Property, we're passionate about helping you make money through property investment. We offer a personalised and professional service to help you reach your personal investment goals. We understand that investing can be a big decision. At 000 Property, we focus on research, educating our clients and managing the process from start to finish to give you complete peace of mind. We'll even help find the tenant. Organise your obligation-free consultation now. 000property.com.au or call 1300 897 000.